Okay, to grant from grants. The next is to contribution for annual dinner, to contribution for annual dinner, to contribution for annual dinner. Next is to to dividend, to interest, to dividend and to interest, to rent, to rent. Next is to receipt on annual reports, to receipt on annual sports, to receipt on annual sports. Next is to sale of old sports material, old sports material, old sports materials. Next is to sale of old magazines, to sale of old magazines. To sale of old magazines. Next is to sundry receipts, to sundry receipts. To sundry receipts. So these are all items are on the debit side, that is on a receipt side. Next, see on the payment side is on the payment side is first we'll start with an opening balances. Suppose in the problem if any bank overdraft is there, so that is a balance brought down, means we have to pay to the bank for some amount, so that is the payment to the bank, so it will come under the payment side is by balance brought down. Next is by annual sports expenses, by annual sports expenses, by annual sports expenses, by salaries and wages, by salaries and wages, by salaries and wages, by rent, rates and taxes, by rent, rates and taxes, by rent, rates and taxes. Next is by insurance, by insurance. Next is by furniture, by furniture. Next is by sports equipment, by sports equipment, by sports equipment, by books and periodicals, by books and periodicals, by books and periodicals, by audit fees, by audit fees, by printing and stationery, by printing and stationery, by printing and stationery. Next is by honorarium, by honorarium. Next is by bank charges, by bank charges, by postage and telegrams, by postage and telegrams, by postage and telegrams, by water, electricity, by water and electricity, next is by convenience and traveling, by convenience and traveling, by convenience and traveling. Next is by repairs and maintenance, by repairs and maintenance, by repairs and maintenance. Next is by sundry expenses, by sundry expenses, by annual dinner expenses, by annual dinner expenses, by purchase of investment, by purchase of investments. Okay, next is by balance. Okay, suppose if debit side is more, remember this, if debit side is more, then credit side is less, then we'll get the balance carried down. That balance carried down are either in cash or bank. By balance carried down, cash or bank. Okay, do the total. The next is if credit side is more, then debit side is less, then we'll get the bank overdraft. So to balance carried down, to balance carried down is bank overdraft. Okay, so it is a pro forma of receipts and payments account. Now see here, so this is a pro forma of receipts and payments account. Next is procedure for receipts and payment account. So generally a receipts and payment account is a summary of the cash book. Generally a receipts and payments account is a summary of the cash book, and therefore as in the cash book, receipts are shown on the debit side, that is left hand side, and payments on the credit side, that is right hand side. So the following points are noting about this preparation of receipts and payments account is, okay, first point is if any opening balance of cash or bank shown on the first on the debit side separately. First we'll start with a opening balance. That opening balance of cash and bank are shown on the first on the debit side separately. Next is it includes all receipts and payments. It includes all receipts and payments, whether they are revenue or capital nature. Next is it does not exclude receipts and payments relating to any previous years or any subsequent years. For example, if a member pays his subscription in advance for the coming year, so it is shown on the receipt side, left side. That is on a debit side is, so to subscriptions of a previous year, of a current year, of a next year. We'll take like that. Next is it excludes outstanding expenses of the period. So in this receipts and payments account will not take any outstanding expenses. Will not take any outstanding expenses of the period. Next is closing balance. This closing balance represent cash in hand and bank at the period. And next is next topic is the following steps are to be followed for preparing a receipts and payment account is first step one is drop a pro forma of this receipts and payments account. Opening balances of cash and bank are to be written first on the receipt side separately. Suppose if no information is there that relating to the opening balances of any cash and any bank, then leave space for that. Okay. Then next step two is next step two is analyze the figures given in the expenditure side of the income and expenditure account. Okay, so in income and expenditure account we will identify the expenditures. Okay, what are the expenditures are there. Okay, so another first post of those items of expenditure in which no adjustment is to be made, directly it will come under to the payment side of the receipts and payments account. Suppose in our problem any income and expenditure is given, based upon that we'll prepare the receipts and payments account. Under that income and expenditure account we will identify that expenditures are right under the payment side of the receipts and payments account. Next is prepare statement or open ledger accounts. Prepare statement or open ledger accounts. Statement or open ledger accounts in respect of items of expenditure in respect of items of expenditure in which adjustments to be made, in which adjustments is to be made. So post that adjusted amount, post that adjusted amounts to the payment side of the receipt side of receipts and payments account. Next is analyze the given information. Next is third step is analyze the given information and balance sheet. Analyze the given information and balance sheet and post that capital expenditure involves that outflows of cash or bank. Outflow of cash means it will means a payment. Receives means inflow. Outflow means payment. When we are making payment in the form of cash, then cash is going outside now, so it is an outflow of payments. So it will come under onto the payment side of the receipts and payments account. Next, step 4 is analyze the figures given in the income side of the income and expenditure account. Suppose income and expenditure is given. Under that account, we will identify the incomes. Okay, we will identify the income. That incomes are to be right under this receipt side of the receipts and payments account. Okay, directly that receipts are appear on the receipt side of the receipts and payments account. Next is prepared statement or open ledger accounts. Prepare statements or open ledger accounts in respect of items of income, in respect of items of income in which adjustment is to be made, so that post the adjusted amount post the adjusted amount to the receipt side of the receipts and payments account. Next is we analyze the information, that is information and balance sheet, and post that capital receipts. Any receipts are there for a given period of a longer period of time. If any to the receipt side of the receipts and payments accounts. Step 6 is now the balance sheet, the receipts and payments account. The closing balances will represent the balances of cash and bank at the end of the period. Okay, at the end we'll close this account, receipts and payments account. How we close this? By writing these closing balances. So these closing balances will represent the balance of cash and bank at the end of the period. So in this respect, the following points are important as in this respect, the following points are important as if both the opening and closing balances of cash and bank are given, if both the opening and closing balances of cash and bank are given, both payment side and receipt side of the receipts and payments account will be getting equal. If only the opening balances of cash and bank have been given, then the balance will represent its closing balance of cash and bank. And next is if only the closing balances of cash and bank have been given, the balancing figure will represent the opening cash and bank. So this we will discuss briefly while doing the problems. Okay. So this unit is very easy. Just we will learn this pro forma and remember that is getting which side. Okay, you have to remember that if legacy is given, then where it will become under the receipts and payments account, receipt side. Like that, you have to remember that all these items, and you have to identify which is income and which is expenditure. Suppose if any amount is paid to outsiders or for any purchasing or whatever it is, any payments is there na, so that is what one type of an expenditure we want to make payment for that, so it is an a what, it is an a payments like that. If any cash is received, so where it will be recorded, it will be recorded on the debit side under this receipt side. Like that, you have to remember that these pro formas. Okay, on debit side what items will come, and credit side what items will come. Okay, and next very important pro forma under this is an income and expenditure account, that is also very important, that will be discussed in next class.